Hi, everyone. Welcome back to another episode of the Teens for Business podcast. I'm so glad you could join us today, where we'll be talking about the banking system and its related government regulations. I'm your host, Ivan.
I'm Jack.
I'm Karen.
And I'm Jackie.
Okay, so in recent news, we had a bunch of mid-sized to large-sized banks collapse, including Silicon Valley, which is the biggest one, Silicon Valley Bank, which is the biggest bank collapse since the 2008 2009 financial crisis, which is probably a really big deal, especially after the COVID-19 recession that is happening, and all our current economic, like, generally negative economic state we're currently having. But basically, how banks work, I just want to get into how banks work, is that banks usually create money by how they have reserves, and they usually lend out most of what the depositors deposit in the bank. That's generally how they create money into the money supply. And that there's some blatant problems with that, because you're creating money, and once that money is gone by the depositors withdrawing their money, then all the created money also disappears. So that also contributed to what we're seeing today in the Silicon Valley Bank, which collapsed like 2 weeks ago. But this is really special because the Silicon Valley Bank focused generally on tech startups, and this led to most accounts having over the $250,000 that are insured by the FDIC, which is a federal organization, which literally stands for insuring deposits. Um, but basically, when it collapsed, not a lot of startups and surrounding tech, which is a big thing in today's modern society, they're not getting their money back. Well, that's what they thought they were going to be. So they had a bank run after they found out that SVB was investing in mortgage-backed securities, which by the current state is not doing so well, especially with interest rate hikes and mortgages also increasing. Um, so they're like, depositors found out about this, and they're like, no, this is bad. I'm gonna lose my money. So everybody started, taking their deposits out, and that's how the bank run was caused, and also how Silicon Valley Bank collapsed, resulting in the FDIC taking over. However, um, the federal government's actually repaying most, if not all, of all uninsured balances in Silicon Valley Bank. So I guess that's a generally good thing, but it's not limited to Silicon Valley Bank, which last week First Republic Bank also suffered a major bank run. First Republic is a smaller bank, but it's a really similar situation. It's a mid-sized bank with most of the depositors being wealthy people, not generally tech startups, but wealthy people. And they also had a bank run. FDIC took over, and then now in recent news, the last few days, the 11 big banks, like the really big banks, have came together and decided to deposit like $30 million in order to save First Republic. But also in recent news, which is last few days, Credit Suisse also, but it's the situation a bit different, but it's been leading up to this over the course of last 3 years. But they have also suffered a collapse also due to First Republic and SBB, and UBS, one of its rivals, have decided to buy and merge for $3 billion. Also in recent news, the federal lending to banks this week have eclipsed the 2008 financial crisis peak, um, simply because there's too much risk in letting the banking system do its thing and collapsing within itself, which in general is not a good thing. But just wanted to ask you guys, before this situation happened, did you think there was a problem with the banking system, or is there a problem with banks that you're constantly thinking about?
I mean, I don't know if I would say that I'm constantly thinking about bank problems. as a whole, but I do think like what happened last week wasn't really just oh, it happened last week. Oh no, it's not like a spontaneous thing. I think it was like kind of a culmination of events in the past that happened. And I do think, and you're probably going to get into this later, Ivan, but I think that there is a point where the government should step in. And I don't think I'm someone that really encourages a lot of government intervention. Um, but I think for situations like these, it is important for like there to be some kind of help. Because if you have like one bank crash, usually like especially something as big as SVB, because that was like I think the second largest bank failure in history, and then First Republic was like the third largest failure in history. So like that's kind of a very monumental event. It's not just like something that makes the news three times and then it's gone. That's going to have like lasting um reverberating effects on the economy. So I think like you do need to have some sort of support or like some sort of buyout or acquisition, like what happened just like today or a couple days ago um, with the banks in Sweden and everything. So I think like that's pretty important, and that's like kind of my main thoughts on that. And I know you're gonna get into it later, but just a snippet of that.
Yeah. Well, I want to just rephrase the question a little bit. It might have been too specific, but what is like the your general opinion on what is currently happening? Just like, it's all sudden. I'm pretty sure nobody really saw this situation happening. Like it was really sudden. Um and like after 2008, 2009 crisis, we're like, okay, we're done with this. This is never going to happen again. But it actually happened.
Generally, I feel like there were signs that were leading to such like a potential collapse. Like for example, like in like the Silicon Valley Bank, like 97%, according to New York Times, like 90% of
Number one,
97
events like
percent
these are not
97% of like the deposits were like uninsured by like the federal government. And even though like the federal government now is like taking like a lot of like action to like insure the companies what they're gonna get, it's too late. And as a result, there's like a little like a chain reaction. And I feel like that was like one of the big signs. I'm not sure how much percentage of like other banks is like deposits are insured by the federal government, but I feel like since we saw that with the Silicon Valley Bank, we probably also saw this trend in like other big banks. So yeah, I feel like definitely we could there were definitely a lot of like big signs that in the banking system that were like that could have like led up to like an event like this.
Yeah, I think I mean like before like it made headlines for collapsing. I haven't heard of SVB before. I think it was just like a bank for many I know now like it's a bank for many like VCs and startups, but it wasn't like a very I don't think it was a very famous bank because like I personally haven't heard of it, and I just thought that it was interesting like because it had to it was forced to sell government bonds just to let customers withdraw their funds. There should be some sort of protection in place just to um they should have had some sort of like risk calculation that would allow them to get out of this situation. Otherwise, like these bank failures, because right now like other banks are going to be responsible for paying for these bank failures. In 2008, I think it was taxpayers who had to pay for the majority of it, but now it's going to be other banks because as part of the FDIC is like the sort of insurance. It's basically insure customer deposits like up to $250,000. So with this, I think like it's basically impacting like interest rates and stuff because I think they're slashing everything. So it's just like yeah, the story is just kind of like it was very sudden. I feel like there should be some sort of system in place to prevent something like that from ever happening, especially since 2008.
Yeah, definitely. I think the reason why nobody has really heard of Silicon Valley Bank before this is because it's really focused on startups or specifically tech startups. So if you're not in the tech startup business, I don't think you'll probably create an account in Silicon Valley Bank. But you know, the problem with Silicon Valley Bank is that in these long-term, securities that they invested their money in, they're long-term, so they're not liquid. And when the bank run happened, they couldn't sell off those securities quick enough in order to, pay the depositors their money that they deposited. So that's how, their entire bank collapsed simply because they didn't have the money. They did have the money in securities, but they weren't liquid. So a lot of people were calling this a liquidity crisis, and definitely I agree with Kylin that there should be measures put in place, like screaming. Maybe like before, interest rate hikes, it wasn't that obvious. Buying these long-term securities, like, oh, it's safe, low risk. You have a higher, like generally a good return for not that much risk. But with the new situation with the Fed increasing the interest rates, that suddenly is a bigger problem. And I think that the depositors realized this by creating a bank run. But I just also want to ask you guys how big this, what do you think about the impact of the situation? Because one, I personally have a family friend that owns a startup, and he didn't have a bank account at SVB. However, the company that manages the payrolls for his startup was in First Republic, and First Republic also had a bank run. And, that caused his payrolls not going out to his employees, which is not a good thing. But in startups are definitely more negatively impacted than the general people like us and our families. So what do you think about the impact of this situation?
I think that it will actually have a pretty like large impact on like just like those like tech startups. Like as we know, like tech has been continuously growing throughout the past decade, and we predict that will definitely continue growing in like the future. And like startups are like they're trying to like investigate these like technological like developments, right? So like since like tech has become like so like big, like hope and like recently like tech has like kind of like recovered from like the recession with like the interest rates being like hiked up from like the Fed and stuff, and they were just like a little bit recovering from that until like this like the bank collapse happened. So like definitely we'll probably see like tech startups and like just tech companies in general like struggle as a result of like what happened with like the bank collapsing.
Yeah, I think like not only with these startups, I think it's also like the greater effect of this is like it also affects like Federal Reserve and rate hikes as well as like maybe possibly like the housing market, because apparently like mortgage rates have also dipped in the wake of these big collapses, and it could indicate like maybe it's temporary, but like mortgage rates were softening, and then economists are also forecasting like a tightening of credit. So like bank collapses are like they have these like effects right in front of them, but they also have like larger implicated things that you can't like directly see, but it's like it's like there's still like very big consequences.
Yeah, and talking about the Fed, the Fed is playing a very big role in this current situation, um, especially in the role in deciding whether or not to pay back the depositors, the uninsured deposits that, most like, I'm pretty sure it was a really big percentage, either I think 90% or something. They had 90% of accounts had over the $250,000 insured deposits, which is, and then probably like a good portion had over millions, because the investors are investing millions at a time, and you need that money to keep your business running. So that the Fed definitely played a big role in deciding whether or not to pay back the uninsured balances, and I think it's one of the good things they did because it kind of boosted the confidence in the banking system, right? Because if the Fed wasn't like, if federal government, the Fed and the FDIC was like, no, we're not paying back the uninsured deposits, then people would be like, oh crap, this is not good. Let me withdraw my deposits in the smaller banks like First Republic, and deposit into a safer place like, I don't know, Bank of America, Chase, where they have a bigger bank, which is not. It will still definitely happen. Bank run definitely can do a toll on these big banks, but it's generally a lower risk situation because these banks are less likely to collapse. So, in your opinion, is the Fed actually and the federal government doing the right thing in this current situation? I mean, the Fed also like decided to stop raising interest rates for this current while for obvious reasons. Because raising interest rates gives people incentive to not store money in banks, but buy securities where the return would be better. But it's like a general trend that they're probably going to continue to raise interest rates after this situation goes over. So, is the Fed actually doing the correct thing, in your opinion?
I mean, I think it is, or they are doing the correct thing. Um, Particularly because like there are instances where government intervention is like a little more iffy, but I think in this case, because the effects or like the consequences of not intervening or like not doing anything or doing um something else is just too big to ignore, I think. And there's also like the thing about interest rates and how like the economy is still like going on. It's not just gonna like completely reverse its course just because the banks failed. Like and like oh my god, inflation rates, like they still have to like have things like that and they still have to like look at it. But now like because of the banks issues and like what happened with it, it's like do they raise interest rates, do they keep it, do they continue to tighten things up? And I think like what they're doing right now is good, but I like at the same time there also is like a lot about recognizing both sides of it, because it is like a really difficult situation to be in because you have both sides and like you're kind of just in this bind almost, like which side do you go to?
I agree with that. I also feel like it could be a little bit too early to judge whether the Fed is like doing the right thing right now in regards to like the bank collapses, because this happened only like 1 or 2 weeks ago. So like I feel like right now what they're doing like with like compensating the banks like with like the deposits and like insuring them, I think it's a right step for like the future, because like for that Silicon Valley Bank, at least 97% of the deposits weren't insured by the federal government, and like that was a huge problem. And like and for like and since they weren't like insured, like thing if like a collapse happened, the economy, I mean, the business would have been like severely impacted, and like also like the economy would have like taken like a big toll. So I definitely think the federal government like intervention right now is a correct step. But since right now it's such a complex situation with like the banking system, like one bank collapsed, and like after that so many other banks collapse after that, and not just and those like subsequent collapses not just they didn't just impact like tech startups, but they impacted like a lot of like general people. So right now it's like the situation is like complicated. I think Fed, the federal government is taking a correct like step for the future, but right now I feel like it's too early to judge.
Yeah, definitely. It's probably definitely too early, especially since the situation is completely different. Like before, the Fed was mainly combating inflation rates due to COVID, and then everybody's like, "Oh, I let's buy this random thing I found on AliExpress," and they're like just injecting. The consumer demand was increasing a lot. People buying a lot of useless quotation quotation useless things, and that it resulted in high inflation rates, and that was the problem. But now because interest rates have risen so much, now it's caused a completely different problem, which is probably even more like has a bigger impact on businesses. In fact, um, that the Fed probably should change. Have consider on what they should change. Um, but actually, on Twitter and a lot of other platforms, politicians, especially people like Bernie Sanders of the left or even the far left, have called out hypocrisy. Especially like Bernie Sanders, I remember seeing his tweet on saying that um, the CEO of Silicon Valley Bank was also on the board of not well, like on this board that manages money in the government. Um, especially around this San Francisco Bay Area, which is where Silicon Valley Bank has majority of its customers. And Bernie Sanders and a lot of other left-leaning politicians are saying that the people should not pay for this collapse. But we can see the general trend is the people aren't paying, but if the situation deepens, if more banks collapse, then the people, the taxpayer, will need to start paying, keeping these banks afloat, especially during 2008, 2009 financial crisis. And especially also people have called it out that the CEO SVB also have sold off most, if not all of his stocks, totaling over $3 million before this banking collapse, like literally right before. So based on what this, do you guys think that the government should have stepped in? And if they should, how much should they step in? Because I'm pretty sure there's a limit on how much or how little you can do.
I think like the government definitely like they have a responsibility to basically like because taxpayers like we shouldn't be responsible for a bank's collapse, especially like in 2008 like I know a lot of like taxpayers were responsible for like paying majority of that, and that was like a much larger collapse than just SVB and a couple other banks, right? But as you said, like once they all start falling down, their other banks will not be able to like support. They won't be able to have. They won't have enough money to help sustain it, and that's going to fall on the taxpayers, and that's not reasonable. So I feel like government involvement is necessary to a point where like you need to prevent anything else like this from happening.
I also agree that maybe government intervention may have been like like I feel like necessary because like as like you stated with like the context like before like the collapse, like the CEO kind of like sold off like a lot of shares. Well, I feel like if the CEO was like sold off a lot of shares and they were also like holding like a job in like the federal government, would would that CEO have like known if like something like that would have happened? Because if that person would have known that, why wouldn't why shouldn't they have like told like people that, oh, maybe there's a risk of this like happening, maybe the federal government should maybe help out and like insure the bank deposits a little bit more. So I definitely think government like intervention should have been like, I think there were like clear signs that something that there was a big risk that something like a bank collapse would happen soon, a bank run could like happen, and like I definitely think that the government could have done something to prevent it.
I think also in terms of what the banks should do is like there's also the aspect of okay, it happened and looking at what they can do for the future. And I think Kaiwan mentioned this, but it's also about like you look at this scenario and you say, okay, well, this happened. How do you like move on and like how do you have future regulations put in place in order to not have this situation again? And I think that's really important because like what happened almost was like not preventable to the point of like, oh, it could have just entirely not happened, but like it was, in my opinion, at least like somewhat preventable if there were like stricter regulations in place on the banks. So like you can't obviously have like complete regulations of like, okay, you can't do this at all, but like the things with the bonds and everything. But I think that there should be regulations stricter than what they are now on what they can and can't do regarding like deposits and having them like put into long-term bonds and like the liquidity aspects of it. So I mean, I think like also the thing about Jack mentioned about the CEO, like at the same time, I don't think we can really expect the CEO to be completely honest with that because like obviously morally he should, but I don't think as citizens we can't expect him to. Like that just morally in my head doesn't make sense. Um but I mean, I think as a whole it just falls on to the government to have proper regulation and proper like preventative measures in place.
Yeah, definitely. I definitely agree. Um, actually, I personally think that like what Jackie said, you can't really expect the CEO to be like, hey, morally, I should do the right thing. No, he's gonna be like, hey, I'm gonna lose a lot of money if this happens. So let me save all the money I have before saying, okay, this is what's happening. Right? My money is the number one priority. And also, I've read this article like these big startups, like startups or big depositors in SVB who are like kind of the elite. They have direct access to staffs within the bank, and they kind of have this priority access. Um, they were being told like, "Hey, the situation is under control. We're not seeing a lot of withdrawals happening. It's all under control. It's gonna be fine." You know, but it obviously wasn't fine, and literally like a day after or like a few hours after the bank run happened and the entire bank collapsed. But I generally think that SVB was probably doing the best they could, because if they told them like these big depositors like, hey, there's a lot of withdrawals going to happen, and you kind of sabotaging the confidence of your own depositors, which is only going to make the situation worse, right? If the depositors aren't, the money holders aren't confident in the banking system, they're gonna take the money out and cause an even bigger bank run, which probably would have been even worse than what happened in the last few weeks. So generally, I think the government should step in, as in not like, oh, we should take this action from a purely, financial economic standpoint. I think they should also look into behavior aspect, since now everybody knows what's happening. Everybody knows what happens when the Fed raises interest rates. Everybody knows what happens. Everybody knows what type of securities are good, how to get like internet has made information access so much easier. So I think especially the Fed, the federal government should take more action regarding the behavioral aspect of human society. Like we should expect that CEOs are going to save their own money first before taking action, right? And we should expect the public to do this when they lose confidence in the system.
I mean,
Yeah.
that's sorry. I mean, I think that's like a really interesting point to bring up, but like I agree with you in the basis of like a pure like moral aspect or like a like conceptual way, but I don't know about like the effectiveness of that and like if it is actually implementable, because like you can try to predict what they're going to do, but at the end of the day, like there's still the aspect of like selfishness and like wanting to preserve your own shares, your own money as the CEO or like some executive of a company versus like the regulations. And I think like there's just so much you have to account for. It really kind of is impossible. And at the same time, a lot of the regulations that there are in place, like there's loopholes, for example. And maybe like what like one example of like a really popularized loophole, I guess, is like when people talk about taxes, right? There's always like, oh my god, no, the rich can like have all these loopholes, yada yada yada, like whatever, things like that. And like you have loopholes, and you can't really expect CEOs and like the wealthy like the banks and companies to like not exploit those loopholes. And like morally, obviously I disagree with that, but in terms of practicality, you have to acknowledge that that is going to happen. And it really is, I think, difficult to account for it just because there's so many ways around certain things. So that's just my
Yeah,
take.
I definitely agree. Practically, there might be some hiccups, especially with how fast our government is at doing things. They're like lightning fast, but definitely there's gonna be a lot of practicality issues, especially lobbying, big companies paying politicians to say this thing, that thing. But in this certain situation, I know it's pretty contained already, but especially I don't like the idea of, you know, banks being kind of greedy and not doing a good enough risk analysis, and suddenly they lose all their money, and then now the taxpayers have to pay for something that they didn't really uh have a say in, you know. So I think I really like the idea how big banks are coming in, spending $30 million on saving First Republic. Like, the banking system has enough money to save itself in this situation. Maybe not in all, but in most situations, they have enough money. So I think there should be federal government regulation that kind of limits the damage to the banking system and doesn't let the taxpayer take the grunt of, the punishment for a wrongdoing. But anyway, let's move on to our takeaways for this episode here. But definitely one of the takeaways is the Fed and the government is probably doing the best thing it can, by making sure there's confidence within the banking system right now, and making sure no more bank runs are gonna happen, especially for mid-sized banks, which are definitely the center of this problem. What else do you guys think?
I think I think one of my takeaways is that like we definitely need to see more like regulation to like help prevent like bank runs, like what is currently happening and what happened in 2008. We definitely need to see like more bank regulation in order for like in order to like have this like not happen in the future. And but naturally, like with like the banking like system process, like it's gonna inevitably happen. We just want to like we just like need the regulations to like prevent like it from like having like as such a large impact as what is happening now and what is happening in 2008. But also I think we also need to see like government, like I know they're currently doing the best that they can, but there's definitely a magnitude of action that they could have taken to like somewhat like prevent this from like going as like big of as having a big of an impact as it is like having. Like they could like insured more of like the bank deposits in the Silicon Valley Bank, and they could have like taken other actions to like sort of like stop this from becoming like such a large issue.
Yeah, I agree with Jack. I just think if there were like a system in place from SVB, there's definitely different banks now, at least right now, they should know like how they should be doing everything in their effort to make sure something like this doesn't happen again, because it's like very dangerous in terms of its like potential implications for everything around it, the Federal Reserve. And I'm not sure, like as we said, it's like a little bit too early to know if what the Federal Reserve is doing is right, because we don't know how much it's truly gonna help. But it's important to like just do like to have a system in place as like somewhere you can go back on if something does go wrong, so you like bank collapses never this like magnitude never happen again.
Yeah, I think it's interesting that it was SVB and then it was First Republic, because those were the second and third largest bank failures in history. So like having number two and then boom, number three in a matter of days is really just kind of astronomical to think about. And I also find it interesting how we kind of talk about this in the past tense, in the sense of like, this happened, we have to make sure it doesn't happen again. Because like, in my opinion, like, yes, it did already happen, but we still are in the process of like cleaning things up and like making sure like, okay, what happens to all of the money? What happens to like these institutions? What happens to the effects of it? So I think it's going to be I think it's going to be interesting to see the not aftermath in the sense of like aftermath, but just seeing like how other companies take a look at this and how they try to help like SVB. And I know we talked about this a little bit at the beginning and like kind of like Credit Suisse and how they're getting bought out or how they got acquired by their former rival. So I think it's going to be interesting to see how that all plays out. But I do agree with everything that was said about the regulations and how the government definitely needs to have measures in place and regulations and just preventative laws in place to make sure that this situation of this magnitude doesn't happen again.
Yeah, I definitely agree. Like last week when I was planning this episode, I was like, hey, it's just SVB, nothing will ever happen. Everything's good. Everything's under control. And then First Republic happens. And then literally yesterday, Credit Suisse happens. So it's definitely still an ongoing situation. But only time will tell how 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 good of a job we did to especially government to do it to contain this current situation, which is kind of spreading worldwide. But that's it for our episode on the banking system and our opinions on the current situation about the banks. Thanks for tuning in to the Teens for Business podcast, and we'll see you guys next week.